Hey guys, Danny here, and I wanted to take a couple of minutes, maybe 2-3 minutes, to talk about this post. This post is about how to overcome some of the challenges we're seeing of buying in today's current marketplace. So first of all, let's define the problem. What I'm hearing from a lot of you guys, a lot of our investors that are actually actively placing, making offers and trying to buy, is that's very frustrating. Very frustrating that you make multiple offers, or you're not, even when you're quick, you're not quick enough, and houses, slip away, good houses slip away rather quickly, or multiple offers. And that's the reality. So the reality is this: a lot of the metros are doing well, price-wise. It's a seller's market. Our main competitions are homeowners in the marketplace. So good houses have multiple offers and are moving rather quickly. At the same time, inventory is not keeping up with the demand. So there's not a lot of inventory. So you can see that out of the sub-segment of the metro that we are considering, when you're doing some filtering, you'll see that there's only few properties that are really relevant, relatively small number of properties that really relevant for us to purchase. And then, out of the small number, who says we're going to get any of them, even if we make good offers? So what can you do about it? Couple of things. So first of all, keep trying. There's you got to be a little bit persistent. I can tell you from my perspective, I see investors that are just making offers, and they get it. They eventually get the right property. So it's tough. I'm not trying to make any excuses for the metro or the agents or what's happening. This is the reality. Keep at it. There's nothing wrong with just keep trying and making offers and responding. Basically, whatever you've been doing up until this point. So there's nothing wrong with it. It's just very challenging. Other things that you can do. So there's a couple of things. Number one, if you can make cash offers, that will help. That'll give you a little bit of an advantage. It's not going to be a winning ticket, but it will get you a bit of an advantage. Okay. That doesn't mean that cash offer doesn't mean you're going to be buying cash and not with a mortgage. It just means that we are going to do something called a delayed financing. The lenders know about it. So that means instead of buying today with financing like we typically do, we just split it into two steps. Step one, buying with cash, assuming you have the cash, of course, and so the seller knows it's a cash deal. And right after, maybe within a month or so, bring in the financing as if we're buying it at the same time. So we're just splitting this point of purchasing and with financing on one day into two separate dates that have few weeks to a month in between. You got to work with the lender on doing it together. Again, it's called delayed financing. That's number one, if you can. Number two, we are starting to look for properties that require more work in order to make them rent ready. Okay, let me explain that. Usually, every house that we buy requires anywhere between $1,000 to $5,000 as a make ready. Some paint, some touch-ups, some things. It's a house. That's usually what we're looking for. Now, because of the challenges, we're trying to target houses that need more work, $10,000 to $20,000 worth of work. Now, this is not a renovation project per se. This just means it's a house it's really dated. It needs a whole fresh coat of paint, maybe a new roof, floorings throughout, etc. And maybe other things, maybe new appliances, maybe some areas that needs a little bit more attention. TLC, tender, loving, caring, but on the entire house. When you have a house that needs all those components, it will add up to $10,000 to $20,000. And some of the metros we are in, the teams are set to handle that type of work. Again, this is not a flipping or this is not an extensive renovation. This is just making, let's just call it fix to rent. Okay, we're going to bring the house up to kind of more modern standards, freshen it up a little bit, and then rent it out. So the whole purpose is to purchase, renovate it, or fix it up, and then rent it out with a clear purpose to hold it, not to sell it. Okay, that's not what we're trying to do. When we do something like this, there's a very good chance that the house we are buying, when we're done with updating it, will have a higher value than what we paid for it so far, purchase plus the work that we did. And because of that, we'll get a higher rent. So there's a definitely advantage to go about doing so we can actually you know, get an advantage, or there's a good enough of a reason to do it. Okay, again, this is something that not every investor would be comfortable doing, but if you are, and we have the teams that can actually support that. Not every market has the ability or the local teams to do that, but some of the markets do. By all means, consider that. Okay, that means, you know, it will take some time to finish you know, the house, so plan for a little bit longer vacancy. It's not an extensive project, and it will definitely help you get through the door to those projects that are just not, you know, homeowners don't want to touch them because they require much more work. Just today I saw a house in Dallas, or outside of Dallas. It exactly fits the bill, right? So this is a, you know, a house that needs is, you know, the seller is asking $170,000, but it's all dated, you know, paint and some, you know, wallpaper. I don't know about the roof, and the flooring is old and dirty, and it's a 17,000 plus square feet home. That means maybe $10,000, a little bit more. Old appliances, really old appliances. So that means we need to bring, you know, a whole fresh, kind of freshen up, update things. We don't need to move walls. We don't have to make any, you know, dramatic changes. Just the whole house needs to be kind of TLC all over. That will be $10,000 to $15,000, depending on what needs to be done in more detail. And if we offer this seller maybe a cash offer for he's asking 170, let's say 155, 160, put another 10 or so into it, there's a very good chance this house will be worth, according to our analysis, somewhere in the $185,000 to $190,000, and will collect rent relatively to that, you know, proportionate to that value. So that's an opportunity. If you can combine those two strategies, cash offer with some work, it will even get you, you know, further, obviously. So to change things around, if you're in a position that you can make cash offers, if you're in a position to do some more work than just few touch-ups, it will get you that competitive or advantage that we are looking for you. Okay, so you got to talk to the agent about it, our agent. Let them know you're able to do that. Let them know you're comfortable with doing that, and maybe fine-tune that strategy. If you need to talk to me about it, no problem. Let's talk. You know, make sure everything is set on your end, and you are good to go. One more thing I want to say is actually about the increasing interest rates. So the increasing interest rates may scare some of you, or may concern some of you from purchasing, because the cash flow is obviously hurting by that point. So first of all, let me just put things in perspective. We are still at a relatively low interest rates altogether. So we're talking about 5% annual rate, give or take, between, you know, depending on the down payment, depending on, you know, 20 or 25%, and depending on you, of course, and maybe some points. So we are plus, you know, give or take 5%. We can even get below 5%. So that's, first of all, something to not be concerned. I know it looks like, oh my God, the rates are going up. They are, but, you know, they're still relatively low. Don't forget that for a second. Also, remember, there's a very good chance you will refinance and get a better term loan in 5, 6, 7, 10 years from now. So you're not marrying into that loan for the next 30 years. You're probably going to refinance. You know, historically that has been, you know, happening every few years or so. So remember, it's only for the first few years, and there's a very good chance in the mid future you will actually reposition the loan in a better term for you. So don't forget that for a second. And also, there is a little bit of a silver lining here. The silver lining is that I'm already seeing reports that there are less, or there's a decrease of mortgage applications. That means less people, remember, you know, not investors, but homeowners, are applying less for mortgages. Okay, that means the buying power of the homeowner is weakened. Now, if the buying power of homeowner is weakened, and we're already seeing the trends, I think for the last 1 month or two of 2017 and the beginning of probably January of 2018, if we're seeing that's what's happening, that may be an indication that the markets are going to slow down a little bit in terms of buying power, meaning it may actually be converting from a seller's market to a buyer's market. Today we are in a seller's market. Now, I don't know to tell you if that's the case, right? It's too early. Things in the real estate world take time. We have to have another quarter or so to see what the patterns are going. And we're heading towards the summer, which usually is a little bit harder times for real estate altogether. But there's a very good chance there is some kind of a slowness on the mortgage applications, which means maybe it will decrease the amount of buyers or change the buyers pattern others, and will weaken the seller market position. So it's actually a good thing for us. So keep that in mind. Keep those things in mind. If you're still a little bit confused, not sure what to do, let me know. Let's talk it through. Make sure you have your correct strategy in place. Maybe clarify a few things. But we are definitely on our end trying to find the competitive edge. We're actually working on a third method to buy properties, which is something it's not new, but just to restructure a couple of things on our end, so it will open up the opportunity for you guys to buy. It's a bit of a challenging one, so we're still ironing and trying to make it work well. And we, of course, will let you know as soon as we have that in place. So thank you for taking the time. Enjoy the post, which is actually the written, of what I just told you on this video. And let me know if you want some help. We're here to help you guys. Have a terrific rest of your week, and obviously lots of success. Bye-bye. Thank you.